XRP isn't just another cryptocurrency, it's purpose-built financial infrastructure designed to address the $156 trillion challenge of cross-border payments. XRP derives its value from two sources of scarcity: a fixed total supply of 100 billion tokens released predictably from escrow, and a burn mechanism that permanently destroys a small amount of XRP with every transaction. Unlike Bitcoin's slow and energy-intensive mining process, XRP settles transactions in seconds, with near-zero fees and a capacity of 1,500 transactions per second, making it viable, real-world payment infrastructure. XRP's burn mechanism may seem deflationary in theory, but in 2023, network fees totaled only $583,000, proof that real deflation demands much broader adoption. Ripple is evolving from a payments startup into a regulated bank, now applying for a federal charter and seeking a master account with the Federal Reserve. XRP boasts a $113 billion market cap, yet its on-chain utility remains limited. Daily DEX trades fall below $100,000, while competing networks process over $1 billion. RLUSD is Ripple's institutional-grade stablecoin, fully backed one-to-one by cash and U.S. Treasuries, approved by the New York Department of Financial Services, and overseen by former regulators like Sheila Bair to build trust, not hype. In 2020, the SEC sued Ripple, alleging that XRP was an unregistered security, a move that triggered market turmoil, led major exchanges to delist the token, and halted U.S. retail trading. Judge Torres determined that institutional sales of XRP constituted unregistered securities offerings, but ruled that programmatic trades on exchanges did not, thereby protecting retail investors from SEC enforcement. In August 2025, the SEC and Ripple jointly dismissed all appeals, concluding their 5-year legal battle. Ripple paid a portion of a $125 million penalty, and the SEC no longer has enforcement authority over XRP's secondary market. Of the 80 pending U.S. crypto ETF applications, 20 focus on XRP, meaning regulated funds may soon allow pension funds to invest in XRP without needing a digital wallet. ETF approval could channel billions into XRP, even without significant real-world usage, compelling markets to weigh speculative potential against demonstrated utility. Ripple is building a global banking network, with licenses secured or applications underway to become a regulated bank in major financial jurisdictions, including Singapore, Ireland, the UAE, the EU, and the United States. Ripple uses RLUSD for stable, everyday payments, while XRP works invisibly beneath the surface to power every cross-chain transaction. Ripple is running central bank digital currency pilots with Bhutan, Georgia, Palau, and Montenegro, serving strictly as a technical partner, not as a sovereign issuer. The XRP ledger operates with over 120 independent validators, yet Ripple still controls nearly half of all XRP, raising questions about its true decentralization. XRP, XLM, and XDC are all ISO 20022 compliant. This compliance gives them direct access to the global banking messaging standard, which has a hard deadline set for 2025. In 2021, the World Bank designated XRP as a candidate for cross-border settlement, confirming its institutional promise well before widespread adoption. Led by SBI Holdings, Japan's $6.3 trillion banking sector will fully integrate XRP in 2025, a concrete step beyond speculation. BlackRock's tokenized treasuries, the DTCC's SEC-approved pilot, and Ondo's XRP ledger bridge are converging into a new institutional capital stack, rewiring Wall Street's settlement. The $140 trillion bond market is being tokenized onto programmable ledgers, making governance, not just tech, the critical success factor. Blockchain hasn't done away with centralized planning. Instead, it's moved that planning into protocols, oracles, and stablecoin issuers, where code now orchestrates what markets once coordinated. Tokenized settlement renders every transaction fully legible, allowing tax enforcement to operate invisibly. As a result, the state becomes more effective while staying less visible. The CLARITY Act establishes a new digital asset category, shifts XRP under CFTC oversight, and requires stablecoins to comply with full reserve banking requirements, ending the era of regulation by enforcement. MyCA brings together Europe's 27 national crypto regulations under a single licensing framework in 2024, showing how traditional finance is integrating crypto rather than pushing back against it. California's AB 1052 designates idle cryptocurrency as unclaimed property, while AB 1180 leverages XRP ledger technology to facilitate state payments. The SEC has dismissed its case against Coinbase with prejudice, a permanent termination that strongly indicates XRP is not considered a security, especially since Coinbase continues to list it. At Davos 2026, BlackRock, JP Morgan, and Ripple positioned blockchain as the new financial infrastructure, moving the focus from speculation to controlling the standards, rails, and sources of yield. To assess XRP's real utility, verify regulatory claims directly, read court filings, and track on-chain metrics, not just price movements. For deeper insights into XRP, Ripple, and the hidden architecture of global finance, follow Douglas J. Boggs on Substack and Medium.